Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Adrian Chng, founder and chairman of Fintonia Group, financial services firm providing fund management, wealth management, and merchant banking solutions focused on the fintech and digital assets industries. Adrian, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Great to be here.
The Bitcoin market is highly chaotic and complex. What are the challenges that professional investors face while dealing in Bitcoin and other cryptocurrencies today?
The cryptocurrency and Bitcoin ecosystem is very fragmented. So as a professional investor, you have more than 1,000 exchanges to try and get your Bitcoin, and they all have different prices. The second challenge that you have, and therefore buying at scale or selling at scale becomes difficult. How do you get the best price, best execution? The second challenge, in particular for the cryptocurrency asset class, is security and hacking. And all of the exchanges over time, including some of the largest, have been hacked. So as an investor, that's obviously one key concern. Digital assets are connected to the internet. The internet is on 24/7, and an exchange, by definition, needs to have a lot of its cryptocurrencies available to trade. So I think that's the second kind of major issue. And the last one, in many countries, is how do you do estate planning? You can't actually pass your Bitcoin to your estate in many common law jurisdictions. So all of these things add up to a very high friction way for a professional investor to invest.
How has the recent volatility impacted the way professional investors see the crypto market, and what is the longer term sentiment?
So if we step back and think about Bitcoin being the largest crypto asset out there and still the bellwether for the asset class. So I think the challenges we're facing is that institutional investors have come into the asset class in a much larger way. However, Bitcoin is still seen as a risk asset, not yet quite like gold. And therefore, what we're seeing is real assets linked to real world inflation and macroeconomic environments impacting the asset class, impacting Bitcoin, and therefore all of the cryptocurrencies. I think the second issue is really to do with some perhaps faulty design of the algorithmic stablecoins that we first saw with Luna and Terra, and it's also unraveled or shown the excess leverage in the system. So I think the algorithmic stablecoins plus excess leverage, and lastly, we find some business practices in this emerging asset class that you would not find as a regulated player like ourselves. So we've seen commingling of client funds. We've seen people ad hoc stopping withdrawals. These things happen in an emerging unregulated asset class. Longer term, we believe that this is all good for the industry. I think these practices will be regulators will see these and make changes, and that we will see more professional practices come in, and it's already happening.
So Adrian, what is Bentonia Group's core proposition? How are you bringing order to a very fragmented market?
Yes, I mean, we see ourselves as bringing order to chaos. And essentially, that's because we're bringing institutional grade practices. We are a monetary authority of Singapore regulated entity. So so what we help investors is to execute their purchases, their buys or sales better, because we connect to multiple exchanges and market makers. We're able to move large amounts of fiat currency, again, because we have strong anti-money laundering and know your client practices. So we're bringing this institutional framework to what is an emerging asset class. And that helps professional investors get comfort that things that they would take for granted in equities or bonds can also be done in the cryptocurrency markets.
And finally, will regulatory clarity increase or slow down crypto adoption among professional investors?
Look, we think that regulatory clarity is only going to improve things for professional investors. I mean, ultimately, we are still talking about a very, very early stage adoption by mainstream investors. And for the larger institutions and pension funds to start investing people's retirement money and so on, they need to feel comfortable that there's regulatory clarity, whether that's tax, whether that's in terms of ability to buy and sell, and even pass on the assets, how to account for them, how to value them. All of these things require more regulatory certainty if this is to become an even larger institutional asset class.
All right, Adrian, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks, Joe.